Audio. But hopefully the current financial system doesn't fail us like back then and actually doesn't overextend themselves this time. But I want to look at the Shiller PE ratio, and Shiller actually won a Nobel Peace Prize for this price to earnings ratio. And it's quite self-explanatory. The price that you pay, and it's quite self-explanatory. It's just the price that you pay and the earnings that you get from that price that you paid. Which, just for context, on Black Tuesday, the Shiller PE was at 30, and well, currently we're at 37. And yes, those are actually quite high because the average market is around 15. However, this isn't just some crazy astronomical price where it's going to definitely melt down tomorrow. And this might be skewed a little bit because the price to earnings with the current economic slowdown in the past year will actually and this might be a little bit skewed because the current economic slowdown the past year will actually push the price to earnings ratio up because the prices are not reflective of the earnings because the earnings were slowed down. But looking at it cyclically, you can actually look this up on. But looking at it cyclically, the Shiller PE is actually pretty high, and it's almost the same levels as 1929, which that's not very good. However, the current economic climate is vastly different with crazy monetary policies, stimulus packages, rampant inflation, and people just don't even know what to do. However, this could actually be justified through the current monetary policies, these crazy big tech companies that we haven't seen before just raking in cash, and these historically low interest rates. One crash that was absolutely massive was Japan in the 1980s, and that was when real estate was hiking up so heavily. Japan still hasn't actually reached the same all-time highs that it did over 30 years ago. However, I don't really like to compare these because it's not really apples to apples. Their economic structure is vastly different than ours. Their economic structure is vastly different than the United States, as well as their bubble in the 1980s with real estate was over double the dot-com bubble here in 1999. And segueing into the dot-com bubble, and that was when people just were so flush with cash and they just wanted to put it in any tech companies that they could. If it said .com, people were throwing as much money as they could at it because they were really excited for the future. However, with all this excitement and enthusiasm, it didn't really pan out because the financials behind these companies were not great. Many of them weren't profitable, and the vast majority of them just collapsed after a couple of years. They say about 80% of the tech companies actually ended up going bankrupt in the subsequent years, and the ones that actually did survive took a massive beating. However, if you look back on them today, they were bargains. Look at Amazon. Amazon was down to about $16 from its crazy highs. The same with Google and Apple. And moving on in chronological order, it brings us to 2008. And this is the mortgage crisis, when banks gave out too much money to people who weren't qualified, and therefore those people who weren't qualified actually defaulted on their mortgages, and people started getting kicked out of their homes. the market dropped a ton and the Fed tried to step in, and well, they did an alright job. Well, the market collapsed and the Fed stepped in to try to save the day. Michael Burry is known across the world for his crazy callouts that have actually come true. However, he has made a couple callouts that haven't panned out. In 2017, he said that there was an imminent plummet coming, and, well, that didn't really happen. And there was a couple others that he actually claimed to and never really panned out either. However, he didn't really put a timeline on these things, so technically he could be in the... And a couple other callouts also didn't pan out, so technically he wasn't really right, but he didn't really put a time limit on them either. However, once you actually get over like 5-6 years of that claim, is that claim really valid anymore? Or is he just spreading a ton of FUD in the markets and just scaring the shit out of everyone? However, I am also in the media business here on YouTube, and I understand you gotta get clicks. And the person that says there is an imminent crash coming bigger than any other crash in all of history will definitely get more clicks than the guys like, I will get 5% over the next 10 years. So the validity of him saying that the entire market will melt down... So the validity of him actually saying the everything bubble is upon us, well, I don't really know the validity of that. So how truthful is this? So how truthful is this crazy claim? Well, I don't really know, because the monetary policies seem to change every single day. And that impacts the markets immensely, as well as and that changes the market's performance immensely on the daily. But, well, how do you get ahead? And that's crazy. Well, how do you get ahead? Well, you do the exact same thing that people have been doing for 100 years and beginning it. So how do you get ahead of all this mess? Well, you'll do the exact same thing that people have been doing for the last 100 years and been making money. You consistently invest in the market because the overall market just tends to go up. And yes, there are crashes here and there, but in the grand scheme of things, they're not even that big. If you can wait them out for 4 or 5 years, that is a long enough time for them to recover and if you just can wait them out for a couple of years, that is more than enough time for them to recover and start making you more bread. There has not been one scenario where people have invested $1, waited 20 years, and actually had a negative return. It's always been positive, and, well, for the foreseeable future, I am betting on the United States actually producing more and more wealth. For real estate, I still think that the prices will go up over the next 100 years. So even if I buy them at the top of the market now and decide to sell them in 20, 30 years, the majority of